Hello students, welcome to part 6 of Assam SLET series. So let's start. Question: capital gearing ratio. So capital gearing ratio is that amount of debt, okay, which a company has in relation to its equity. And debt kiman ase in relation to its equity, that is capital gearing ratio. We also know it as solvency ratio. So solvency ratios says about the solvency of the company, that whether the company is able to pay their debt or not. Okay, so there are various types of solvency ratios. Debt to equity ratio. So debt to equity ratio में formula जानो, long term debt divided by the shareholders fund, right? And proprietors ratio, or which is also known as equity ratio. So equity ratio formula की है shareholders fund divided by the capital, yes, or the other formula is shareholders fund divided by total assets. Also we find out the proprietary ratio by this formula also, shareholders fund divided by total assets, right? Interest coverage ratio, this is very important ratio, okay? এইটোৰ questions আহিও থাকে এক্সামত যে কেনেকৈ interest coverage ratio ওলাবা তুমি. So interest coverage ratio formula হয় earning before interest and tax divided by the interest on long term debt. Okay, so আমি earning before interest and tax কেনেকৈ ওলাম? Earning before interest and tax, or it is also known as the net profit before interest and tax. Yes, so how to find this one? If you want যে মই interest coverage ratio কেনেকৈ ওলাই শিকাই দিওঁ, so I will make another video on that. Please comment. Okay, so আমাৰ কি ratio solvency ratio হয়? Debt equity ratio, then proprietary ratio, which is also known as equity ratio, then interest coverage ratio. All these are solvency ratios, and capital gearing ratio is a solvency ratio, right? Next is liquidity ratio. Liquidity ratio हमारा है current ratio, quick ratio, cash ratio, then net working capital ratio, right? So current ratio ওলাবলৈ আমাৰ formula হয় current assets divided by current liabilities. Sorry, ইয়াতে current ratio লিখা গৈছে, এইটো current assets হ'ব. Okay, then quick ratio formula হয় quick assets divided by current liabilities. And quick assets ওলাবলৈ আমি কি formula use কৰোঁ? Current assets পৰা আমি minus কৰিম, deduct কৰিম inventories and prepaid expenses, and we will get the quick assets. Okay, and cash ratio formula hai total cash and cash equivalent divided by the current liabilities. Okay, and net working capital ratio formula is current assets divided by current liabilities. This is important, net working capital ratio. Okay, and here junto quick ratio hai, it is also known as acid test ratio. Okay, acid test ratio is commonly known as quick ratio. Okay, so I hope it is clear. Next is the efficiency ratios. So efficiency ratios we call the assets turnover ratio. The formula is sales divided by average total assets. Then inventory turnover ratio. Then cost of goods sold divided by the average inventory. The formula is receivable turnover ratios. Formula is credit sales divided by average account receivables. And account payable turnover ratio formula is suppliers purchase divided by average account payable. So ইয়াতে যোনটো asset turnover ratio হয় সেইটো questions আহি থাকে, আৰু inventory turnover ratio মানে questions আহি থাকে এক্সামত, স্লেটতে হওক বা নেটতে হওক. Okay, so it is important. The various profitability ratios are gross profit margins, operating profit margins, net profit margin, return on assets, return on equity. So you can see the formulas here, and please remember these formulas. Okay, it is important for your exam. So here let us solve the problem. Capital gearing ratio is the solvency ratio. Then fixed assets turnover ratio is the efficiency ratio. Return on capital employed is the profitability ratio. Asset test ratio is the liquidity ratio. So here the B will be the correct answer. Okay. Question number 10. At the time of dissolution, an unrecorded asset taken over by Mr. X, a partner, should be debited to assets account, Mr. X capital account, realization account, none of these. So আমি journal entry to কি হ'ব জানিব লাগিব. Yes, so যেতিয়া unrecorded asset লোৱা হয় dissolution টাইমত partner লোৱা হয়, so the entry will be partner's capital account to realization account. So here the partner is Mr. X, so Mr. X capital account will be debited to realization account, right? So the answer will be B. Next, question number 11. In modern economic theory, short-run average variable cost curve are. It is horizontal shape, vertical shape, saucer shaped, none of the above. So the answer will be saucer shaped. Okay. যদি আমাক ইয়াতে সুধিলে হয় long run average variable cost curve কেনেকুৱা হয়, what is the shape? So it is envelope shape. Okay. You will also get U-shaped or envelope shaped. Okay. Question number 12, it is also matched the following. AR is equal to MR. So let's first see some concepts and then we'll be returning to this question. See this figure, it shows a relationship between marginal revenue or total revenue. Okay, so marginal revenue is when positive and it is decreasing. See, it is downward sloping, that means it is decreasing. Marginal revenue is when decreasing, the total revenue is increasing. So the marginal revenue curve says about the rate. Okay, so total revenue is increasing but it is increasing at a decreasing rate. A decreasing to kone koise a marginal revenue jonto curve hoy hetu ama koise rate to kotha. Okay, je the total revenue is increasing but at a decreasing rate, and this decreasing rate ami kyo gom palo, kor por gom palo, a marginal revenue curve to por gom palo. Okay, then when the marginal revenue is 0, the total revenue is maximum. Okay, and when the marginal revenue is negative, je negative hoi jay, the total revenue amar ki hoy, it starts declining. So table chwa, first table khon pure competition market, which is also known as perfect competition market. In this market amar price to constant thake. Why the price remains constant? Because the firm is a price taker. Okay, so the price remains constant here, and we know that average revenue is equal to the price. And how we find the average revenue? Total revenue divided by the output. Okay, and so the price remains constant in here, that means the average revenue is also constant in this market. Okay, and total revenue me kene ki bola, price into quantity, we will get the total revenue. And how do we find the marginal revenue? TRN minus 1. That means this 40 minus 20, we will be getting 20. So marginal revenue we find it out like this. Okay, so yat swami relationship sum average revenue and marginal revenue. So in a pure competition market, the average revenue is equal to the marginal revenue. We can also say price is equal to average revenue is equal to marginal revenue in a pure competition market or a perfect competition market. But the same is not true for a monopoly market. So monopoly market ki hoy amar, in order to increase our sales, okay, means to increase our demand, we will have to decrease our price for the products. So we keep on decreasing our price day by day so that the demand keeps on increasing. If we want to increase our demand, we will be reducing our price. So as we know, average revenue is equal to price, so the average revenue also keeps on decreasing as we decrease the price. Okay, and total revenue ami gom pao keneke bolao, 20 into 1 20, 18 into 2 36, like this we will be finding out the total revenue. Okay, and marginal revenue, how will we be finding this? 36 minus 20, that is 16. Yes, then 48 minus 36, we get 12. So these way we find the marginal revenue. Yes, so in a monopoly market, the average revenue, when we compare the average revenue and the marginal revenue, average revenue is always greater than the marginal revenue. Okay, you need to understand this very importantly, that ibur junto relationship to etu bhalkoi poriba. Now coming to the question, so amar yat swa average revenue is equal to marginal revenue. So etu kuntu true asile perfect competition market, right? Average revenue is greater than the marginal revenue where in a monopoly market. Average revenue is equal to 0, then the total revenue is maximum. Yes, we have already studied it. And here average revenue divided by average revenue minus marginal revenue, this is a formula for finding out the price elasticity of demand. Okay, clear? So the answer will be this, B. Okay, now coming to the next question, 13 number question. Total revenue is maximum when the elasticity of demand is. When the elasticity of demand is 1, total revenue is maximum. Okay. So the relationship between elasticity of demand and total expenditure, when the price increases, if the total expenditure also increases, then it is inelastic. That means the elasticity is less than 1. If যেতিয়া price increase হ'ব তেতিয়া total expenditure to decrease হ'ব, okay, it will fall, then that means there is negative relationship between them, the price and total expenditure, then it is elasticity is greater than 1. And if when price increases total expenditure does not change, it remains constant, ed is equal to 1, that is unitary elastic. Question number 14. In the long run period, which of the following factors of production remain fixed? Land, labor, capital, none of the above. So we know that in long run all the factors can be changed. Okay, land, labor, capital, yes, everything can be changed in the long run. But in short run, only the labor, that means the variable factors can be changed. Okay, the other remains constant. So in this question the answer will be none of the above. Thank you. যদি এই ভিডিওটো ভাল পাইছা লাইক কৰিবা, সাবস্ক্ৰাইব কৰিবা চেনেলটো, and also share with your friends.